everyone, and welcome to the Dakota Fundraising News Podcast. Today is Wednesday, December 18th. We have one more episode this year. This is the first year of the Dakota Fundraising News Podcast, and we have pretty much made it. We thank all of you for listening in. It's a really good group of folks that we have listening in. We've had the honor and pleasure of meeting a lot of you guys at Dakota Cocktails this year, which has been really fun. Actually had in the summer one random run-in out in the wild with someone who was a podcast listener, which was pretty fun. So if you're listening, you know who you are. Thanks for the support and for coming over and saying hello. Konch, anything else you want to kick us off with?
You know, we should probably mix it up next year a little bit, maybe bring on a guest or two, maybe once a month or something like that.
Yeah.
But if any of our listeners have any feedback around the content, the structure of the pod, anything that you guys are looking to hear on here, you know, open to feedback, kmoua@dakota.com and pty@dakota.com. But if nothing else, I guess we could just get into it, Pat. I know people are eager to get on their way for the holidays pretty soon. Job changes, though. I guess I'll start us off. Clearstead Advisors, they have announced Bradley Knapp has been appointed as the new president and CEO. This is effective the first of the new year. He's succeeding David Fulton Jr., who will continue as a member of the board for the Cleveland-based Clearstead Advisors.
Nice. Yeah, I'll do these next two. So new role at Mesirow. We've got Jason Hendrinos has been hired as Global Head of Fixed Income Sales and Growth. That is at Mesirow on the institutional sales and training side. Again, that is a new role. He's going to be responsible for leading fixed income sales, particularly identifying new revenue streams across Asia and Europe. So very interesting to see what's going to end up happening there. I'm sure we'll have a lot more to touch about Mesirow in the coming years. And then Ginny Lee has left the University of Chicago, where she was a portfolio manager. She was covering private equity and venture. She has joined the National Geographic Foundation as an associate director. They're a $1.4 billion foundation in D.C. Really cool opportunity that she's taken on. I'm sure there's a lot of cool travel benefits and just other, frankly, it's a dream job working for National Geographic in any capacity.
That's awesome. What would your dream role be there?
For National Geographic, I would love to be a writer. I think if they sent me boots on the ground into a city, I guess I'm describing a journalist. I like to be a journalist. What I'm doing right now for
Nice.
the Dakota Fundraising News Podcast, but for National Geographic would be pretty cool.
Yeah.
So Nat Geo, if you're listening.
Their video team would be amazing to be a part of.
Yeah.
It would also be amazing to be a part of Hightower Advisors as well.
They would.
As I segue into there. But they've announced their sixth strategic investment of the year. They've invested in Deckman Wealth Management, which is a Denver-based RIA. Deckman Wealth, they manage around $800 million in client assets, founded in 1984. They're led by their founder, Jordan Deckman, and his sons, Sam and Adam. Staying on topic with RIAs and different advisor teams, Raymond James, they've recruited a couple advisors, namely Scott Burnett and Peter Kelson from Zions Direct, where they manage over $5 billion in assets. So a pretty significant chunk there that Raymond James is going to be adding. The advisors operate out of Cottonwood Heights, Utah. They'll be directly reporting to the Salt Lake City branch manager, Scott Hunter.
Nice. If anyone is covering Utah and going to visit with that new Raymond James division, please go to Zion National Park. It is the most beautiful place on earth. No shock that Zion's Direct is got to be named after that. I actually don't know that for sure, but it's in northern Utah and it's called Zion's Direct. So I'm going to go ahead and guess that it is. You can use that in your email outreach. Summit Financial, though. Summit has, through Summit Growth Partners, acquired Midway Wealth. That is a $500 million Chicago or sort of Arlington, Illinois-based RIA. That is the 17th strategic relationship that's been acquired through Summit Growth Partners. Earlier in November, you'll recall that we reported Summit acquired 3 firms. Those were Southeast Financial in North Carolina, Radiance Private in New Jersey, and Silvertree in Wisconsin. So if you think about a map, they're sort of covering all of it. And then, they also took a minority stake in 2 RIAs in Oklahoma and Pennsylvania. So they're really just trying to cover the whole globe and compete, with the Hightowers, the LPLs of the world. And, they're doing a really good job. 17 this year, or it's 17 total.
Yeah, that's awesome. I think on the last podcast, we just went over an article recently describing all of the the trends around RA aggregators and all the acquisitions going on there. So 17 seems in line with that. Going over to searches though, today we're recording this on the 16th of December, Monday. We just sent out an RFP to all of our subscribers about 2 hours ago as of this recording. Oakland Police and Fire Retirement System, they're looking to allocate $30 million to international equities. RFP deadline for this is January 10th in the new year. Makita is helping out with this one. Additional information for this search here, the size mandate is expected to be around 25 to 30 million, but could just vary depending on a couple different factors there. As I mentioned, we sent this out to our subscribers about 2 hours ago. If you didn't receive that, you can subscribe over at dakota.com. I'll stay with not exactly RFPs, but a asset allocation change for the State of Wisconsin Investment Board. They're looking to increase their private equity and debt target by 2% to 20% of their total assets. They manage just over $155 billion in assets, leveraging Makita, Callan, Stepstone, and Axia as their consultants. On the private equity and debt side, specifically, Stepstone is who they're using. As I mentioned, they're increasing 2% there for their target allocations, as a result, taking away 2% from traditional equities.
Yeah, good to see State of Wisconsin Investment Board. It's fun to talk about. I like calling them SWIB. There's something about that's fun to say. But City of San Jose Police and Fire Department Retirement System, less fun to say, but as fun with what they're planning on for their 2024-2025 private market commitments. So they have approved a 25% increase from last year's pacing. This will be $354 million in total commitments. I'll run through them, but for buyout, looking at $150 million. For venture, $35 million. For private debt, $80 million. For growth real estate, $70 million. And then for private real assets, another $60 million. That'll get them to that $354 just about. Exciting to see what else they do. Same plan. They have recently announced their second half 2024 commitments that they made. So as a refresher, and you can see this in Marketplace, but their consultants are Makita and Veris. This is the San Francisco-based City of San Jose Police and Fire. They have committed to TA Realty's Core Property Fund. That is a core real estate fund, $42.5 million. We talked about TA Associates recently. TA Associates and TA Realty, they are two distinct firms. They split some time ago. They were founded as the same company back in, I believe, the late 70s, but I need to be fact-checked on that, but I'm confident enough to say it on the pod. Not remembering when they split, but they are distinct entities now. Back on topic though, Payden and Regal, that is the Payden Emerging Markets Debt Fund, $5 million allocation. They have allocated to a music IP fund with Primary Wave. That is the fourth vintage of that private credit strategy. It's $18 million. The Crable Fund, that is a absolute return hedge fund, $12 million. They allocated with Tiger Venture Capital. That is a $10 million early stage investment. And then finally, Pelican Energy Partners and Silver Point, $18 million going to the middle market buyout fund with Pelican and $28 million to the direct lending strategy by Silver Point. That's the third vintage of the Silver Point Specialty Credit Fund. Whoa, I got to take a breath. You got to jump in.
Yeah, gladly. Two other pretty large pensions here that recently disclosed investments. Start off with Virginia Retirement System, $117 billion in assets, leveraging Aon, Townsend, and Axia. They disclosed three investments. $150 million going to the Pretium Home Builder Finance Fund, that's value add real estate, and then two commitments to Artemis, $125 million to their Income and Growth Fund 2, and then $50 million to a separate account fund for that fund 2. Going down south to South Carolina Retirement, $48 billion in assets. They use Veris and Alborn. They disclosed $50 million to each of three different funds. $50 million going to the D.E. Shaw Diopter Fund 2, it's private credit, $50 million to Unity Partners Fund 1, and then $50 million to Eagle Point Defensive Income Fund 3.
Yeah, and shout out to our colleague Jeff Heath upstairs. He has been pushing me on the train of South Carolina football all year, and now they've made it to a bowl game. They're playing in the Cheez-It Bowl against the Illinois Fighting Illini on New Year's Eve at 3 p.m. You'll find Jeff Heath and I at Founding Fathers on South Street in Philadelphia at 3 p.m. watching that game. If anyone is local and listening in, we'd love to have you. Maybe we can expense it if you guys show up. Jumping in, though, to our fundraising update to close out, PIMCO, great firm, Pacific Investment Management Company, has secured $502 million in capital commitments for their PIMCO EMD Alpha Fund. They are owned by Allianz, as many of you probably know, and the latest fundraise adds $28 billion to what they are already managing in their absolute return strategies. So very exciting to see that. Walker & Dunlop, their investment unit, W&D Investment Partners, has launched a new debt fund that is targeting $500 million. So far, they have raised $201 million. This is all according to the Form D filing. Additional information, the minimum investment size is $250,000, and the BHA Select Network is assisting with the sales and marketing for this Walker & Dunlop fund. So just a quick fundraising news and fundraising update segment, but wrap it up for us.
Yeah, happy to, Pat. Frontenac, based out in the Windy City where you were just at last week or two, I believe. They're looking to raise $700 million for their 13th buyout fund. This is following the oversubscribed predecessor fund that closed back in May 2022. Frontenac has tapped Harris Williams, an investment bank, to help out with the sales and marketing of this fund. For the Frontenac 13 private capital fund, Frontenac is expecting this to be in the market for more than a year at least. So more to come on that as we learn more, but that's going to wrap it up for today's agenda. Like Pat said at the top, we'll be back one more time this week. If you guys are listening in, as we mentioned at the top as well, any feedback, more than open to it.
One quick question for you, Konch, before we wrap up. Do you think the Eagles are going to win out? We've got Commanders, Cowboys, Giants, last 3 games.
See, I would say yes, but we like that schedule is like a perfect layup to lose an easy one. We just beat the Pittsburgh Steelers pretty handily. We probably lose the Giants game is my guess.
Yeah. I don't mind losing the Giants game. Rest the fellas.
Yeah. I'm a little more concerned on our boy Jared McCain's meniscus.
I have no comment at this time.
Well, hope you guys enjoyed the sports talk, the nature talk. Maybe next year Pat will find his way at the National Geographic, but until then we'll be back on the Dakota Fundraising News Podcast this weekend in the new year. Thanks, guys.
Thanks, everyone.
This episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediary database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases, websites, Form ADVs, and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakota.com/Dakota-Marketplace today.